Hey everyone, and welcome to Wellness Wednesday. I'm Jason Vitag. I come to you every single Wednesday to offer an explanation on what's going on in the world today. We do touch upon money, and today's topic is about the Silicon Valley Bank, SVP, and the banking crisis, and giving you insights on banking alternatives, kind of give you peace of mind that the banking financial services industry is solid and safe, and there is a lot of sources out there sharing otherwise, creating panic. And I'm sure you're probably pretty stressed or wondering if this is going to affect your money. So I want to calm your nerves. And before we dive in today, what I want you to do is, if you're in a safe space, I want you to take a nice deep inhale through your nose and then exhale. Release it out. Again, let's do that one more time. Inhale through your nose. One, two, three, four, five. Exhale, sigh it all out, release all that tension, that anxiety, that anxiousness from all the news you're hearing about the banking crisis. And I put banking crisis in quotes because we're still figuring out what is happening. And if we're going to talk about Silicon Valley Bank, SVP, and Signature Bank, I want you to understand that these are two unique financial institutions that focus their banking services on a niche or a niche part of the banking world. So they targeted entrepreneurs and startups, and of course, people. These startups and entrepreneurs are made of people, so they're made just like us. So it does trickle down in some form or fashion. But there is a frenzy. I have been through this before in the 2008, 2009 crisis. And it seems like I'm living the world over and over again. Sometimes I feel like we haven't learned our lesson. But I do want to calm your nerves, and I do want to calm your fears when it comes to the banking crisis or what's happening with all the news around the banks. And to give you a further explanation with SVP and Signature Bank, again, these are niche banks that focus on entrepreneurs and the startup tech world. And what it's looked like is that this bank started at $40 billion in assets about 3 years ago. It grew substantially up to $200 billion in assets as money was being infused in the startup tech world. And so a lot of these startup companies were depositing their money into SVP. And so the management over at SVP, they had, I would want to say, and I don't have all the facts, and this is based on my opinion, is that they had poor risk management. They were placing the money in these very low yield bonds. And as we all know, rates have been going up as the Fed has been hiking the interest rates. And so these low yield bonds that were held kind of long term, they're losing value. And so the word got out that they were looking to raise some money to shore up their banking statements and their income statements, and it caught fire. And a lot of the entrepreneurs started sharing, the venture capitalists started sharing the news that potentially there's an issue with SVP. And so that caused the run on the bank. And the run on the bank basically means people started going to the bank and withdrawing their money. And you have to understand that if you are a $200 billion financial institution, it doesn't mean you have $200 billion in cash sitting in a vault somewhere. The vast majority of that money is invested. And as I mentioned, it was invested in these low yield bonds. And so when you have massive amounts of customers asking for their money, it's causing a run on the bank. Basically, it makes the bank insolvent. They don't have the liquidity in order to provide the money that depositors have with the financial institution. So that causes the bank to be insolvent, and the FDIC will step in to shore up the bank and to kind of protect whatever assets that's there. And so what we've heard from the Biden administration is that they are going to backstop, so no one's going to lose any money on there. And that's for another topic. And so I just wanted to briefly explain the SVP crisis here. And the overall kind of sentiment in terms of the banking industry is it's going to affect you. And as I've been following this very closely, there is a lot of talk that it may or may not. And I think there's a lot of fear. And that's tends to be what happens with news, right? There's a lot of fear mongering. And then people are wondering and they're stressing out. And because of that stress, we are responding in a specific way that's actually a self-fulfilling prophecy. And so I want us to take a step back. I want us to assess our situation. And I want you to know that what's happening in the larger scale was very unique. And certainly it's something for us to pay attention to. But I want you to breathe a sigh of relief. So again, take a nice deep inhale through your nose and exhale, release it out. And so that's kind of like the quick tip in terms of what is happening in the banking world. So if you have any questions or anything like that, let me know, and I'm more than happy to. Yep. So 2008 all over again, absolutely. And but it's different. I want you to understand that it is 2008, but it is different. That but the similarity again, it's about poor management. This is poor risk management. And so that's something with the that we have to look at in terms of the executives. And I think when we think about executives and people in the C-suite, people who are in charge of the finances of a company, ultimately it falls on them and also falls on the governance of the financial institution. And I say it was supposed to be safe investments, but I'm glad regular people's paychecks are protected. I totally agree, because this is the problem and this is the issue, is that when there is poor governance in a financial institution or any company, it often affects the little people. It affects us. It affects the customers. It affects individuals who have nothing to do with people who are sitting in these kind of, I want to say, like these ivory offices and things like that. So it does have an effect on us. And again, it boils down to what I see as poor risk management on their part. But again, I could probably do an hour segment talking about that, and maybe I will. But for this, I really want to focus on kind of like helping you deal and heal and things like that. So I do want to let you know that I am the author of Happy Money, Happy Life. If you haven't gotten your copy of the book, I suggest you do. It's chock full of ways to improve your well-being and also bringing a bit more happiness and joy into your life. I don't talk about banking in this book, but definitely give you some tips and tools to help you deal with some of the anxious feelings that you are probably experiencing, and also for you to understand the multidimensionality of what makes you you. Uh, the next piece here is that I want to talk about banking alternatives very quickly. So you do have an alternative to the big banks, and that is local community banks and credit unions. So local community banks are financial institutions just like big banks, and they are within the local community. And there's a lot of word out there too. Is the SVP and the banking crisis going to start affecting local banks? And so again, everything is connected, and I'm going to pay attention to see what happens. But I want you to understand as well that I'm a big believer in shopping local, supporting local businesses, and that includes supporting your local community bank. And if you don't know, I am a big proponent of the credit union movement. The credit unions have been in this country for over 120 years, and there are close to 5,000 credit unions. Credit unions are financial cooperatives. They operate differently when you're comparing them with traditional banks. And so if you're not a member of a credit union, chances are you are eligible to join a credit union. And I ask you to consider having a credit union as part of your financial portfolio. I have a couple of credit unions in my portfolio. I have big banks, I have community banks, and credit unions, because I am about diversification, and which is very essential and important when we're dealing with this. The next step here. Okay, so I'm having some internet issues, so I will have to log back and